Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long time frame basis. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So today the question of the day is to fizzle or fly. Does this rally start to fizzle out here, or do we actually continue our trend move up? We've been sitting here for 4 days now. I'll show you that on a chart. And then I want to cover off some of the global month-end charts. Take a look through the Dow names. I think there's some interesting stories to be told in there. And I want to mention that one of the marijuana names started to declare bankruptcy, or actually went into creditor protection today is probably the way I should have worded that. But the ticker symbol CTST on the US side and TRST.TO in the Canadian side. So starting to see this COVID-19 pick off pieces. Cirque du Soleil shut down. Starting to hear a few restaurant names. So keep this in mind as we go forward. I think that's one of the hardest parts about it is businesses that were struggling before are really going to need some help here. So, and my new website, gregschnell.ca, is open. I've got one article on there now, but I should be able to post a lot more articles, videos, and some training courses and things like that that I hope to add in there. Anyway, that's open, and later on this week we'll be merging the gregschnell.com site with the new website. And as always, thank you for taking the time to join me. Okay, just this big picture. These charts are as of the 27th of March, so they're Friday, but we haven't moved anywhere really since then, so they're probably okay. And what you see here is this big downward spiral. Pretty major. The volume, you can make it out in the bottom corner here, was one of the most significant volume bars we've seen in a long time. So that adds questions for sure. This virus, the move of it was relatively quick, but the stock market, worked its way lower pretty consistently through the whole thing. And now we've had a 20% rally. So the good news is this only shows down 14 or 15% compared to if we had closed the month on the lows. That would have been crazy because it was way down there. Transports down about the same 18%. And again, this is going back to Friday. But you can see that all of these, this is a meaningful pullback here. We lost 1/3 of the value of the entire Dow exchange at one point. So of the transports and of the Dow. When you see this big pullback, 1/3 doesn't look like as much because of this percentage scale, but if we had used an arithmetic scale, it would have literally wiped out 1/3 of the chart. So pretty horrific, actually. And the utilities around the same, but slightly better, down 10%. And you can see the uptrend is still intact here, which is a little bit better than the overall indexes. Here's the S&P, and you can see this 2010 uptrend is broken now with this move. And again, volume absolutely massive coming in here, almost double what we were tracking before. Might have even been more than double, a little bit more. With what I think is going on here, I think we can continue to expect some more volatility, but we're starting to see at least things try to level off. And as the news comes out for quicker testing and more ventilators, the pressure is starting to be removed out of the market a little bit. I think the real question is how fast can we get people back to work now? And that's going to take some time. So the NYSE composite, so this is all the stocks on the New York Stock Exchange, really a big move down here. And when this only goes back to 1965, but even if you drew a trend line up here, I'd say we're inside it, but not by much. Anyway, it's pretty major pullback that we had. NASDAQ composite broke the uptrend line that we had going here for 10 years and actually went below it and is now back kind of right up on it. So not that bad, but look at the volume here. This was highest ever, higher than 07, 08, 09. and just in general, Microsoft and Apple with all the shares out there and their market cap at 1.4 trillion, that really pushes this around. So big numbers. Gold was actually down a little bit on Friday, or since Friday, and what we see here is this. We're kind of testing the prior high in the big picture, and we did the same sort of thing over here in 87, and then kind of moved down for a while. Uh, this chart bothers me a little bit just in terms of its structure. We didn't have record volumes in gold, which was interesting. And we're testing, as we test this prior high, the bigger concern we're going to have is that we need to figure out whether or not gold has any power to make a big push to higher ground. I don't think it does. I think gold is going to struggle here, and I hope I'm wrong. It's easier to be bullish, but this chart looks to me very worrisome. When I show you the silver price here, we're trying to hang on in a really big picture way to silver. And again, this is Friday's close, so we've got a little bit of wobble from here. But if $14 doesn't hold on silver, I don't know how far it goes down. This is pretty big. So anyway, from that $50 high we had a few years ago, we've already given back 2/3 of it. And if it's like the rest of the commodities, I think we all know what crude oil did. Huge move down. And crude oil didn't take out highs from 2016-17, but it had a pretty big month without question. It was a horrific month in terms of price action from $60 down to $20. I don't have any good answers for it, but when we see a huge decline like that, and I know we're all trying to get around the Saudi Russia pricing issues and that kind of thing. There's multiple things going on, so not just COVID, but one of the things that we're seeing is lower highs, lower lows, and we have been now for a while. Now we're down here at the bottom, and all of a sudden everybody wants to talk about getting prices back up. We'll see if that's enough to kind of lobby the forces. Globally, we need to slow down about 20 million barrels a day for a while, and then burn off the excess inventory, and then price can probably restructure. For the US dollar, we're trading right in around this 100 level. Briefly, we broke above 104 and then we snapped back. We've come back in. There is a very clear effort by the Fed to try and make sure this dollar doesn't go on a run. And we all understand why. But I think that's the next focus. We have a downtrend line here that is holding on the monthly chart. You'd almost think they planned that. And then the same here on the uptrend. So if the dollar is going to break either way, I think it's a pretty meaningful break and not something that we want to just wave off. With that thrust up, I think there's a significant push into US dollars in terms of people moving to safety. So that's one of the things that makes me think there's more going on behind the scenes around the world. And the Fed opened more movement of the dollar, kind of invisible movement of the dollar without declaring who's doing what. They set up a method that dollars could be moved internationally and not really noticed, so we can't see where the problems are as much. But the bigger perspective here is much like in the '08 crisis, you can see the dollar spiked from 72 to 87. That was a 20-cent move. It wouldn't surprise me if we had that same thing again. We had this huge move up in the dollar while crude collapsed back in 2014, and so far, the I'll call it the forces that be, whoever that is, have been able to keep the dollar from soaring. And again, it broke out to new 17-year highs briefly, so it closed at a 17-year high. If you just take the highest close on a daily basis, this chart's a monthly chart. So we're still sitting here wondering where the dollar is going to end up. But I think the bigger concern that we've got in the big picture is if all of a sudden demand for dollar picks up, that's changing the complexion of what's going on in the rest of the world. And so far, this has been able to, I'll call it, be held in check. And that's one of the things to really watch for the month of April. British pound, that's a pretty clear trend. And now that we've got this, this was kind of the Brexit move, and now it looks like we're threatening the lower end of the range again. Is the British pound going to just keep falling? Japanese yen, much like the dollar, in a bit of a pennant pattern here so far. This, on a big picture, this is a bear flag. Um, I think more generally, this 90 to 95 area has been a holding range for the yen. And if all of a sudden we start to see big disruptions in the currencies, I think then we're going to see another whole leg down on the stock market. So watch the currencies hard in April. I think that's going to be one of the better clues for what's going to happen here. Canadian dollar, over 25% of Canadian exports are crude oil in terms of monetary value. So one of the things that we need to watch for is the stabilization. At one point this week, Canadian crude was down to $3.82 West Texas or US dollars. So that is obviously very low. It's obviously so low that the transport costs were higher than the barrel of crude. It was more money than a Happy Meal, and more money than, or less money than a Happy Meal, less money than a pint of beer. There's all kinds of comparisons floating around. But I think in general, in order for the Canadian dollars to stabilize, I don't think crude can get much lower. So I think the Canadian dollar is kind of in the lower end of the range. And if we start to see some upward movement on price, that could get the Canadian dollar back into here. If the economy weakens significantly more and we see a rush to the US dollar in every other currency, like the euro, the yen, etc., then we're probably going to find lower lows on the Canadian dollar. But it was down here at 68 cents there for a while, so pretty horrific. The euro trading in a tight range here for the last couple of years, with this brief move up in 2018 all the way up and all the way back. Now we're trying to hold this big uptrend, and it had intra-month it had broken this uptrend. Now the question is, can it hold here? And again, if that euro is going to break, I think that's a bigger issue. The 30-year bond, I think that pretty much tells the story, drilling in the bottom right-hand corner. The 10-year bond drilling in the bottom right-hand corner. The 3-month got below zero, and to close out the month, so today's close, it's slightly above zero. So that's the good news, is it closed above zero for monthly charting. But we still have this huge downtrend. Each one of these were marked by a recession when this went down. Obviously, with the slowdown globally, we'll probably have a recession. Some people think that's already priced in and we're ready to go higher. You just don't see many of them that are, I'll call it, 1 month long. So in terms of stock market pricing. The prime rate here continually drifting down, and we're down at bottom 3.25% right now. The unemployment rate, this chart goes back to Feb 1, and on Friday we'll get the new unemployment rate coming out. Obviously, we expect this to move up. I don't know, somewhere around 5.75 would be, if you took the number of new initial claims last month at 3 million, that gets you up into this range. We tend to have a longer term unemployment rate. There's kind of two unemployment rates. But if we had another 2 or 3 million this month or this week, that would put us up around 8 million. So that's going to be pretty significant. And obviously, trying to get all those people back to work is one of the big issues that we're all going to be worried about. So I'm expecting on Friday that this chart goes ballistic. And then non-farm payrolls, you can see that all of the big waves in here were pretty significant stock market reductions, and we've already had a significant stock market reduction. The real question is, again, this is a February number, and so we'll have to keep track of it and just see what the total change is for that. Consumer Price Index, that chart is just so smooth, there's nothing to really notice on it. You do see some wiggles in here around 08, 09, but for me, I can't find any value there. Housing starts nice and high as we finished here. Now, just obviously with everybody slowing down and the number of people employed slowing down, that'll probably take a hit, but it's one of the bigger things to watch for in terms of changes. And it was a big clue back in '05 and '06 when this started to plummet. The uptrend was broken, and that was one of the reasons for concern. So it depends on how much this slows down that'll probably affect our other decisions. From here, what you see on this chart, there's a really big uptrend that goes on. If you take it off this low and off this low, and we're pretty much right on it. So we don't want to see this producer price index start to fall. You can see a triple top building here. And that's been one of the worries that we've had over time as we, this price index is flattening out. We don't have any sort of growth in our data points like this, like we used to have. And so this would be pretty meaningful all of a sudden if this starts to spike lower. So that's a big chart to watch for as we come into month end. Gross domestic product, this chart hardly ever changes. We'll have a slowdown in GDP and it might show as a wiggle up here, but that's about it. Okay, so with all of that, here is the look on the 60-minute. I just wanted to give you a wide view of all of the monthly big indicators out there, but we have this downtrend right here that we're watching on the chart, and if I added whatever simple moving average, and if you just pick a 1,000 period, that would be the 200-day moving average. And so that's real rough. But you can see, again, we'd be up here around this second, this wave 1 down, wave 2, wave 3 down, wave 4. And are we going to make a wave 5 lower is a big question on everybody's mind. Now, we've got this move up here, and you can see we made our high, I want to say Thursday, and then we tested that high yesterday and today and haven't been able to break through it, and we ended up closing below, I'll call it the hourly closes for the last two days or whatever. Briefly on Monday, we fired off the lows and then kind of hovered around here all day. So we're testing that area right now. I think if I put the fib levels on here, so we're going to grab the Fibonacci retracement. You go up to the top here, and we're going to select right up around that range, and you can see this 38% retracement. I'm going to just put it over here so we can see the text a little clearer. But we're at 2660 real rough. Up here I'm at 3385. Need to stretch that to 3390. So we're just below it, and we've been testing up underneath it throughout the day. I think the bigger concept here to be aware of is even a move up to 2200 would only 2800 would only give us 50% retracement. So we've had a 35% drop, we've had a 19% retracement, and of that retracement, obviously the issue is the farther you go down, when you go down 35%, you need a 55% retracement to the upside to get back to where you were. So we've had a nice 20% bounce, and it was relatively immediate, right? Monday, I think we wobbled a little bit on the open and then took off. And then on Thursday, we hit that high. Friday, a little lower. Monday, up. Tuesday, down a little. So we're wobbling in the area, and you can see our momentum is clearly leaving here. Even if we pulled back down to 2400 here, I think that would be enough of a retest. So we'd have a 50% retracement from what we just made, and then we could start to take off out of here. A little bit lower than that, call it 2300. Coming down here, that would give us like a pretty major wave to work from. So you'd have your left shoulder, your head, your right shoulder, and then we'd be trying to work out of this base from there. All of those are valid. Again, the Fed is pumping in $2 trillion here, so I'm having real trouble trying to justify that we're going to go a lot lower unless we start to see some debt markets explode, and then that would be the thing that would surprise, that I think would change the relationship with how things are starting to work. So we're going to keep watching for that, and let me just start at the top here alphabetically and work through the Dow names. So what I want to show here is on Apple, we're sitting right around the 40-week moving average, or the 200-day. And when you look down here on the PPO for Apple on a weekly chart, normally it stays above zero. So in this particular case, let's just say it comes down here, bounces. This is a very bullish place for Apple to bounce from. Full stochastic is trying to turn up right now. I think that's pretty important. And again, it's a huge company. It's cash rich. It's got all of these attributes to it. So there is probably every financial analyst in the world plummeting or pushing their portfolio into these large cash rich stocks so that on some sort of a major implosion, these companies still have the cash to survive and will end up coming out the other side. Looking at American Express, what you see down here is we're up around 140 down to 70. So this is a 50% haircut. Um, Again, why the banks got hurt so hard. So the S&P 500 down 35%, but the banks another 50% worse than that. It's quite a surprise to me. And again, already pushing lower this week. I still think there's something wrong in the banks, and that's one of the big concerns I have. I'm going to just switch modes here and go to view all. Um, okay, so for Boeing, this was the big bounce, and from $89 up to 180, so 100% bounce in here. And now starting to settle in. Still all kinds of issues to work through there. Obviously, getting the plane back in the air. We've got traffic patterns that have to improve. We've got a whole bunch of people that ordered jets that have no money. Big things going on for Boeing. I'm pretty sure we all think it's going to come out the other side. Caterpillar is one of the ones that really put on a nice move today. One of the areas I'm starting to think about is if China's going to start recovering, and their PMI data was good today. So if that was going to happen, then maybe we start to see a move back into the materials, and copper was actually up 3%. So that's one of the nice parts that we've got here. Let me just go show you that copper. So copper was up, 3% to 223 today. And gold and gold miners were low, but the three main, I'll call it, economic indicators were actually okay today: copper, steel, and crude oil. All the rest were pretty lousy, but those three were interesting. And so I would continue to start thinking about some of these material names that are pretty beaten up. Cisco Systems. Cisco has a big WebEx meeting space, so it should have some revenue coming out of that. But you can see a big downtrend here for a year and a half. It's not just recently, it's been falling. Its high was way back midsummer. So Cisco trying to get a little bit back on track here. We'll see if it can actually start to change this downtrend in momentum. Chevron, obviously all the oil names plummeted, so they're trying to bounce off this base. So down to 50, up to 70. Still low prices. We'll see if anything gets solved there. Empty theme parks for Disney. So if you're buying it, it's for a longer term hold. That'll be important. Dow DuPont. What we see here is a real big pullback. And again, chemicals names. We'll see if they can hold up. Nothing promising here. Goldman Sachs really got hammered down 250. I'll call it 250 to 130, pretty much a 50% haircut. And it almost looks like they had a bad investors day, but obviously everything else happened at the same point in time. Home Depot breaking down, trying to rally up to 200 again off the 140 low. So that's a pretty big rally, about halfway. And now it's just kind of jogging in the middle. So we'll see. It's still one of the names I think that'll be okay on the other side as long as people are employed. International Business Systems. This one's actually had a pretty nice bounce, up $20, but it did fall 60, so it fell 1/3, and its bounce has been a little bit less. Trying to hold this horizontal support layer that's going back 5 years, so a pretty important place on the charts. Intel. It doesn't look that bad. It went from 70 to 45, call it down $25. Still a major pullback, but it's hovering right around its 40-week moving average and trying to turn up here now. We'll see if that can fulfill. Johnson & Johnson announced some pretty good information around vaccines and testing. So they've had a big pop this week, and maybe they can start to turn up again. This chart, the PPO doesn't get much below zero, but it hasn't done anything in years. So if it was going to start to break out here, that would be a nice change. JP Morgan, a pullback from 140 to 80, so not quite half price, but almost, and obviously one of the better banks in the world. So Still, still trying to build a base there. Coca-Cola, big bounce. Consumer products company, it didn't hold up any better than anything else. So I don't. This whole push into consumer product companies doesn't make much sense to me. I'd rather just go to cash. McDonald's, 217 to 125, so pretty much in half, and bouncing back up to close the gap. Now we'll just see, but definitely well below the 10-week and the 40-week. No real support there. 3M has been drifting lower. Even the fact they're going to speed up making masks doesn't seem to help. Merck, holding okay. There's a down sloping trend line here, very close to its 10-week moving average. Perhaps it can start to lift up. Microsoft, holding between its 40-week and 10-week. Chart didn't behave very well today, but we'll keep watching that one. Nike, in half again, 105 to 60 and bouncing back up to 80. So kind of right in the middle of the range, but below both moving averages. So nothing really promising there. Pfizer, again, it was in a downslope for a year already, broke down really hard and tried to bounce back up. I just don't think these defensive names are going to be any better than anything else. I'd actually rather go into the junk stuff because at least it could jump 100% than some of these names that are just kind of going to muddle along and try to get back to their old highs. Procter & Gamble, same sort of story. Didn't fall much, but I don't expect it to do much on the upside. Travelers Company, big fall here from 140 to 70, so this dropped 50% from January highs, but even more from last summer's highs. So that whole space, maybe they have a lot of claims coming in or something, I don't know. United Health, this is one of the areas I thought might actually do really well. It hasn't started to pull up yet. UTX, United Technologies, just holding in here, nothing great. Roughly a 1/3 bounce. Visa, we all expect slowdown in consumerism, but you're buying everything online, so I don't see that much changing. This is probably one stock I'd actually like to get back into. Verizon, trying to turn it up here, still sitting very close to the 10-week moving average. Walgreens, I actually thought this stock would be one of the things that would start to break out. Didn't happen, just kept going, so I'm wrong on that one. Walmart, trying to hold this big uptrend line, and we'll see if it can do that. So out of all of the stocks in there, nothing really jumps out at me, but I think the bigger thing, just be careful here. We're at one of those places where if the stock market wanted to roll over, make more lows on bad news, this would be the turning point for it. So with that, thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays and Fridays at 10:30 a.m. Eastern. Thanks, everybody. Bye-bye.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.